Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is Wednesday, February 5th, pre-market prep. I'm just pre-recording this before I head to work. And so, yeah, it might be a little bit short, but I did want to go over some of the charts. And so here we are looking at the UVIX, which is the 2x long VIX futures ETF. And yesterday we did close at $29.69, being down almost 6% on the day, but we are bouncing about 3.5% in the pre-market, which we'll look at in just a second. But I just wanted to quickly look over at the daily chart here, just to kind of look at these levels that I had drawn. And so it does look like we closed below this orange line here at $30 a share. And so, I do think that this could be heading lower, perhaps to this gap that has previously been filled at $27.42, might be heading down to around $27. But like I said, we are up in the pre-market. So that is looking pretty good. And so the high for yesterday, it looks like it was $31.47, which does look like it was testing the bottom of this uptrending line, which doesn't really go back too far in time. But I do think that is interesting. We might be opening up. Let's see, actually notably lower than that. If that was 31.47, we might be opening up about $1 below it, so we'll have to see. But I do think this trend line is interesting, and with looking over at the VIX, which we'll do in just a second, we do have a longer term uptrend that we might be getting back to, so that will be interesting to look at. And so now I'm just going to switch over to the 10-minute time frame to see how we traded during market hours yesterday relative to the lines that I have drawn here. And it does look like during the pre-market yesterday, we did get rejected from that uptrending white line and then opened below it, trading right around $30 a share over the course of the day yesterday, as we are currently above it, as we were trading above it yesterday in the after hours, and now, of course, in the pre-market. But now let's switch over to the VIX to see what that is looking like. And so we can see that we did fall below this longer term uptrending line that I have drawn here, and we do have a gap to the downside, which is going to be at $14.85, and that gap has not been filled. As you can see here, the low was $14.90. That was hit on the 31st, so Friday of last week, I believe. So that gap has not yet been filled. It's about 5 cent gap still left there. The difference between $14.90 there and $14.85. But now I'm just going to switch over to the daily time frame again so we can look at how the stock is trading, or the ETF, I should say. This is the VIX, the volatility index, which closed yesterday at 1721, being down 7.5% or over 7.5% yesterday. But we do have this longer term uptrending level that was acting as support over here before we broke below it, and we did close yesterday slightly below it. I believe over the past couple days I have been talking about $18 being a pretty notable level, corresponding, of course, with this uptrend. And so we'll see with the UVIX up in the pre-market, we'll see how the VIX trades today, hopefully reclaiming this uptrend and going up a little bit higher. However, that would mean other things are going down. So maybe we do start to see this cool off, as this would be the end of this green box period that I have drawn up here. Very arbitrary, really just suggesting that we'll see some upside here, followed by a pullback. But we haven't really seen such a notable move like we did over here on the 13th. That was followed by a pullback, and let's see, followed by this pullback here. Although with the VIX, well, not so much with the UVIX, we did get a spike up to that prior high there. So, I would not be too surprised if we did see a cool off, and we did fill this gap at 1485 on the VIX. perhaps again coming down to around $27 on the UVIX. But then if we do flip over to the SPY, that is the S&P 500 tracking ETF, we did close yesterday above $600, closing at $601.78, being up a little over 0.5% on the day. And it does look like in the pre-market we are trading below $600. So that high of, let's see, 602.30 yesterday does look like we filled that gap over here. So I'm going to have to make that line no longer dash because that gap has been filled. And so I do wonder if we will be getting rejected from that, starting to see a pullback. We do see that volume yesterday was not especially high. So I do think that we could be getting rejected on today, Wednesday, February 5th, but perhaps maybe we get up to this downtrending level that would be around 603 or 604, maybe 605 before pulling back to perhaps formally test the 618 here at $588.88. Also corresponding with this downtrending yellow line. Perhaps if we do break below that though, $583 or so, the 786 here could be retested. And it does look like I have this alert here set at $586.12, but I don't think I need that to be filled because, I got the 786 here. Don't want too much clutter on the chart. And so, yeah, we'll see. But if we do actually break above 605, if we get up to 608, prior all-time highs, that would be breaking this trend of lower highs. So that would be a very good look. But let's flip now. Actually, before I do that, I did just want to point out this yellow downtrending line. It does go back to the prior all-time high that was hit on December 6th. We have, of course, eclipsed that multiple times over here, but that level was notable resistance over here. It could be now acting as notable support. So if we do get down to 589 or 583, maybe, by the end of February over here, that would not necessarily be too surprising as we would be above that support. But now let's flip over to the 10-minute time frame to see how we traded relative to the levels yesterday during the market hours. And so we did get rejected from that gap fill that I do have drawn over here. So I do think that is pretty neat to see on the chart that we were getting rejected following the fill of that gap. Now trading lower following the after hours yesterday and then a gap down into the pre-market. Now looking over at the SPX, we can see that, that gap right there was acting as some notable resistance. And it does look like we did fill it here, hitting a high yesterday of $6,042.48, closing the day at $6,037.88, being up about 0.72%, which is very similar to the SPY. But I am actually going to make this gap now filled since we did fill it, and then flip over to the daily chart just to again reevaluate looking at these levels. Again, I do think that this could be coming down to this downtrend here. That would perhaps be coming down to around $5,900 to $910 there at the 618. So let's keep an eye out for that. Doesn't look like we have any volume data for the SPX. Another reason why it's nice to be looking over at the SPY, where we do see this decrease in volume here as we did go higher in price. That does suggest some weakness. So I do think that while the SPX could be going up higher to test that downtrending light blue line around $6,062, we might be getting rejected from there, ultimately coming down to around $5,910. So I'd keep an eye out for that. And then if we do look over at Bitcoin, did have a pretty exciting day yesterday with David Sachs and the banking committee speaking about the digital asset strategy for the country. But that was actually kind of a letdown, as you do see this red candle for the day yesterday hit a low on the 4th of about $97,300 or so there. And as we are starting this new day, we'll see, are we consolidating to break out to come back up to this prior CME gap from last weekend that was, of course, filled, perhaps getting up to this orange line here at $103,800, which does correspond with the high from, it looks like, January the 6th, and also corresponding with this downtrending level here. Maybe we do get a retest of that, which could be retesting around 94,000 to down to 93,000, maybe a little bit lower, maybe coming down to 92,000, but we'll have to see. And so this retest of that downtrending level would also correspond with a retest of the 786 over here, but we actually did retest that. Maybe we do get a retest of it again, but form a higher high. That would be nice. As you can see, we have been doing that, which is illustrated with this red uptrend here. So do keep an eye on that. And now I am going to switch over to uranium. Still here looking at the URA ETF. This is the Global X Uranium ETF, which closed yesterday at a price of $28.91, being up about 3.33% on the day. We did close above this prior high over here at 28.76. But we're not able to get above the highs that we were forming over here on the 30th and 31st when we started to pull back here. So I suspect that there is going to be some weakness here, and we can also see that weakness reflected in the volume. Yesterday's volume was fairly low, lower than we hit the high over here during that red candle day. We did get a push to the downside, some selling, and we did see more volume on this down day here, although that is suggesting that there was buyers pushing this higher. So that is good to keep in mind, but we can, extend that flag a little bit further over. That does still suggest that this is a bear flag. But on the note of volume that I was talking about, the volume yesterday, it looks like it was about 2.06 million, which is actually higher than it was on the 30th when we hit 1.82 million when we were hitting the highs over here. It is good that the volume is a little bit higher than that, but it's really not that notable, still being, kind of in the range of volume that we have seen over here. So I do still think that URA could be rolling over. And with that being said, let's look over at OKLO real quick. Closed yesterday at a price of $46.86, being up about 2.09%. And we can see that we've got this nice little dragonfly doji there, just being kind of, approximate to the high of $48.02. So, a dragonfly doji would be with the open and close being right around the top there. So a little bit off. But that does suggest that we could be seeing a reversal here, especially, again, looking at the volume down here. We did go to a new high here, whereas the high on the 3rd on Monday was at a price of $47.40. Yesterday's high, like I mentioned, was a little bit higher at $48.02. But that volume is coming down, so that does suggest there is some weakness. So I could see this coming back. I was expecting it to go a little bit higher, maybe to around $50 a share, but maybe we don't see that. Maybe we do start to see a retest of some of these levels down here. So looking at this line here at 43.70, that was the high on January 24th. We'll see if we do pull back below that, as we do look like we are a little bit lower. Just switching over to the hourly time frame, are at $46.02 in the pre-market. Does look like, though, we are respecting this 2618 here at $45.89. Just flipping back over to see where that originates from, and that is from this Fibonacci retrace going from the highs of October 2024 coming down to the lows of December. That is how we get that retracement, and so that is where that 2618 is. Maybe it would actually be good to see where the 1618 is. Maybe that is a more reasonable level that we could be pulling back to. No, that does seem to line up pretty nicely with the 50%. I believe that would be an extension here. Based on going up to around $50 a share, 50% retracement from that extension. Let's see, actually. I'm just going to remove the 1618 because it does correspond with that being around $35. That is just a retracement, sorry, not an extension. The 50% would be around $33.57. And I did just also want to point out one other thing, just going over the Palantir chart really quick. Very massive move to the upside. I regret that I did offload my one little share that I had at $69. I did hit a high yesterday of $106.91. Does look like we're putting in a spinning top there. Volume has been increasing, so that's looking good. What I would look for today is for a decrease in volume if we are to be putting in a higher high, maybe go up to 110. But now we do have a gap to fill to the downside. If we do see over here, the close from the third was at $83.74. Not saying that's going to be filled right away, not even necessarily saying that is going to be getting filled. Palantir does have a tendency to surprise me to the upside, as we can see over here. This does look like a spinning top, so let's keep an eye on that volume. If we're putting in a new high, if volume is decreasing, that could suggest a pullback, but maybe not to 83.74, maybe just to around 90, 95 or so. We'll have to keep that in mind. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot and have a great day trading. Take care, you guys.